In this part of the video, let's understand like what is a term insurance and what is a money back policy. Term insurance, basically the premium that is to be paid will be very less, and insurance coverage amount will be more. Basically, term insurance is for health insurance, I mean life insurance, or you can say it as death insurance. And whatever the extra money that will be left over can be invested into another asset classes. And I mean this is a general drawback for this term insurance. If insurer can can survive the coverage age, the amount that will be received to the insurer will be zero. And when it comes to the money back policy, premium paid will be very much more than term insurance, and the insurance coverage amount will also be very less. And insurance, but the benefit that generally Indians see here, Indian mentality will see here is insurer will get a guaranteed amount if he survive the coverage age. If you remember the first part of the video about the insurance, you have to see an insurance as a risk asset, or basically as a risk management. If you can survive the coverage age, basically, let's see, you have taken an insurance for 85 years, life insurance of 85 years. For suppose, like if you survive till 85 years, you will have 60 years to earn that money. Whereas in money back policy, you will definitely get a guaranteed amount at the end of 85 if you can survive. But if you see the insurance coverage amount, if something happens for you in between, the amount that you are receiving as a coverage amount will be very much less. You can't you I mean that will not help you or your family at any case. So now, whoever people are feeling that money back policy is something that we are looking for, we have gave an illustration here so that you can choose how a term insurance is, basically more beneficial than money back policy. So let's take that illustration. Suppose there are, let's for an example, let's take, there are two people, Ram and Raju. At the age of 22, both are planning to take a life insurance, and both are ready to pay a premium of 42,000 per year, whereas Ram has picked term insurance and Raju has picked money back policy. So generally there are more Rajus than Ram. So let's see how these two guys, or how a term insurance is better than a money back policy. So Ram is paying a premium of 8,000 for the insurance and investing remaining 34,000 in an index fund, whereas Raju is paying the same premium of 42,000 in a money back policy. And if for say, if both die at their age of 32, so 10 years from now, Ram will receive 1 crore 7 lakh and 51,000, because Ram has picked a term insurance of 1 crore and the premium is just 8,000, whereas Raju has picked a money back policy of 15 lakh life insurance, and you'll get a guaranteed returns of 4% by the end of your money back policy expiry. As death insurance is just 15 lakh for Raju, Raju has could have received just 19 lakh 22,000. Per se, if both die at 48, Ram will receive something close to 1.54 crores, whereas Raju will receive just 25.36 lakhs. And let's think, like if both survived, Ram gets back 76 lakhs. You can ask me like how 76 lakhs, because as you said, like when the term insurance, in term insurance, if you survive the age, then you'll get zero, right? But here, every year you are investing 34,000 rupees in an index fund, and if you see the history of index fund in the last 30 years, Nifty index fund has generated profit or generated a CAGR of 11%. I have created an Excel. I can send you that Excel. So in that Excel, like we have clearly illustrated on how much amount is getting invested and how much interest that they are getting generated for term insurance. And if you see the money back policy, money back policy, Raju gets back only 24 lakh if he can survive the term age. And this is just 30% of what Ram is getting. So basically, I mean, due to lack of this knowledge in India, everyone is choosing money back policies, and even a insurance company will try to sell more money back policies because at the end they need to pay a very less amount for a high premium. So consider insurance only as hedge. If you survive, maybe like you'll definitely like you would have earned so much amount. But if something happened in between, you are 22 to 60, then your nominees will need to get more amount. Where is 1 crore and where is 25 lakh? So so just consider this part. And I mean, these are not illustrations. Even though this is an illustration, I have got all the insurance amount and the term policies from a famous insurance company. You can verify them. Thank you for watching this video. If you have any comments, do let us know in the comment section. Thank you. Team Veturia signing off.